Hey there, everyone. Dave Keller here with Stockcharts.com, and welcome to this special edition of The Final Bar. I'm off on vacation this week, but wanted to share with you top 10 charts for August 2024 while I was away. Hope you guys are all doing well and weathering these uncertain times. I find a platform like Stockcharts.com can be so valuable in helping you make sense of these markets, helping you navigate these markets for sure. This week, we're going through our top 10 charts to watch for August 2024. We've hit on a couple really interesting themes so far. And if you missed our previous episodes, please make sure you go back and watch them, because I think each one of these gives you a couple ideas, but also shares with you some tools on stock charts that can help you make sense of these markets. On Monday, we talked about the Magnificent Seven stocks, Meta and NVIDIA. We talked about using the scanning engine to find some of those names in constructive patterns. On day two, we talked about the consumer staples sector, two individual names that were interesting, the value of going defensive, and also our dashboard and how to customize that to look for names on the move in any sector. Yesterday on Wednesday, we talked about further defense, low volatility, high income plays in the utilities and real estate sectors. And we talked about the RRG, the relative rotation graph, which I think has brilliantly illustrated the rotation and leadership that we've experienced here in 2024. Today, on Thursday, we're going to talk about the healthcare sector. This is an interesting sector, to be honest with you. Healthcare is one of those that I don't think maps very well. Some sectors are very purely growth, like technology. Some are very purely defensive, like utilities or REITs. Some are more cyclical plays, like energy or materials. Healthcare is kind of a weird, diverse sector because you have big pharma, defensive things like Johnson & Johnson. You have biotechs, which are super volatile, often have binary outcomes, lots of gaps, and relatively high beta. You have life sciences, you have devices, you have supplies, you have healthcare providers. It's a bunch of different things, all related to healthcare, but it reminds me of like consumer discretionary, where they are, consumer names, but very different businesses that are represented. I think the same could be said for the healthcare sector. Having said that, here are two names that I found really interesting in the healthcare sector to watch here in August of 2024. And I'll share with you why earnings should be top of mind here as you look forward coming out of the recent earnings season and starting to mentally prepare for the next one coming up in October. AbbVie is a biotechnology company. And again, AbbVie is an example of the biotech names that have seen a great resurgence here. The ABBV, which is a biotech ETF, doesn't look as strong as AbbVie in particular. And I find when you have a theme like biotech, a lot of times, or semiconductors or home builders, a lot of times the sector, the thematic ETF is probably a great way to do it. That industry ETF that gives you exposure to a group of stocks, I don't have a problem with that. However, if you have conviction on a particular name and if the chart is more compelling on certain names than others, that's what may lead you to pull the trigger on an individual stock. And I think that could be the case here with AbbVie, because we've had a nice break above resistance. With AbbVie, Q1 was actually quite strong. Coming off of a November low, we actually had a nice rally into an early March high. We retested that in late March. We then pulled back to test the 200-day moving average. I think that was a pivotal time for AbbVie. Right about here, things were looking pretty dire. We had closed below the 200-day moving average for the first time since December the year before. The RSI was consistently below 50. The relative strength was negative. All of a sudden, we bounce off of the 200-day. We quickly get back above the 50-day, which then served as support. All of a sudden, here in mid-July, we're making a pattern of higher highs and higher lows. And this looks a lot more like a chart in the accumulation phase. What's happened since mid-July now into mid-August is we've now broken out. We've made another pattern, or continued the pattern of higher highs and higher lows. We've gone above resistance. We didn't trade just to resistance around 178, 179. We actually broke through resistance and pushed well above 180 to now test mid 190s. The momentum has shifted where the RSI is consistently above 50 as opposed to consistently below 50 back in April and May. The relative strength has improved because the stock is improving relative to its peers. So I like the fact that overall we've seen additional moves to the upside. We're seeing additional strength. And I think that tells you a lot about the improvement in this particular group and in this particular stock within the healthcare sector. AbbVie is actually an interesting one because I don't think of a lot of healthcare as necessarily high dividend pairs, although some of them are. AbbVie actually has a pretty decent dividend right about now. Even with the fact that the price has appreciated so much, it still pays a pretty decent dividend. So I think this is an important chart to watch. Really, I mean, number one, to represent the fact that the healthcare sector, I think a lot of investors have been ignoring it because for a while, particularly in the second quarter, healthcare really started to underperform. However, I think you're starting to see quite a bit of an improvement. And when a chart like AbbVie rotates so beautifully to a clear accumulation phase, I think it deserves a second look. Second chart I will show you, and there are a lot of different groups that I thought of highlighting, but I'll go with the healthcare providers. This is HCA. I would say similar names would be like Tenet Healthcare, THC, UHS, Universal Systems. UHS is another one, kind of similar charts to what we're looking at here. HCA has actually been a very strong chart off of the October low. You think about how a lot of stocks have had a choppy, uncertain 2024, periods where we've had significant drawdowns. HCA has had pullbacks like others, but they keep making higher lows, and I think that's what's really encouraging here. Coming off of the October low, we rallied up to around 330, pulled back, didn't even get close to the 200-day moving average here, around we'll call 295. We then made a new swing high, a higher low, and I think that was important. And then we make a new swing high, and most recently, we've broken above resistance at 340. We've pulled back to test that breakout level and rotate higher. What I like about a chart like this is sort of a classic technical pattern. If you look at a bunch of charts over time, you will find more and more of these, and you get to the point where you just see it, you immediately recognize it as a pullback to resistance. A lot of times when you have a resistance level like you did in June, let me zoom in a little bit here to maybe the last 6 months, you can see what I'm talking about, right? So we had this rally to the short-term peak around 340, 345 here in June. We then pulled back. We did go briefly below the 50-day moving average, but found support at the late May low around 315. We then gapped back above the 50-day moving average. When we broke above 345, that got us above that resistance level, which for me, that's when it enters my radar, right? If I'm not already looking at an HCA, the reason why I scan for stocks making new 3-month highs is to find charts like this that have been sort of sideways choppy, but all of a sudden they're breaking above a short-term resistance level. That can be often the beginning of some really good price action. But what happened after that is what I want to highlight. We pulled back to the breakout level. So you had the breakout level here, we broke above it, and then we pull back, and that breakout level, that resistance now becomes support. That for me is a beautiful entry point, right? A breakout that pulls back to the breakout level. We then can enter there. If we've not bought already on the breakout, maybe that's where you have an entry point. You can use that breakout level as a very clear stop. So I would say as long as a chart like this remains for now above 340, 345, that means we're holding the early August swing low. We're holding an ascending 50-day moving average. And as long as that's the case, I'd probably want to continue holding a name like HCA. I think charts like this that have emerged in an accumulation phase, again, above 2 upward sloping moving averages, showing all those signs of accumulation, but also breaking back recently to, or pulling back recently to a breakout level. That's a classic technical setup that I think, more often than not, you want to assume that that's going to continue. With both of these charts, with HCA and with AbbVie, I would say, I always think of charts as in one of two versions, right? It's innocent until proven guilty, which means we're going higher, we're in an accumulation phase, and I'm going to assume that trend persists until it doesn't, or we're in a distribution phase, in which case I think the chart is guilty until proven innocent. I assume that trend is going to continue until I get some signal that it's not. Or that it's reversing. I think for now, charts like HCA and AbbVie deserve the innocent until proven guilty label. They've demonstrated that they're in an accumulation phase. They're making higher highs and higher lows. The goal as a trend follower is to follow those trends as long as possible and continue to benefit from the upside that you see in those particular names. I do want to highlight, by the way, earnings. Both of these companies reported earnings in late July. Earnings season's kind of wrapping up here. But as you think about the month of August and September, going into September, there's going to be a lot of focus on economic data, a lot of focus on the Fed, more and more focus on certainly elections, although there hasn't really been a lot of market moving reaction to that. And on top of that, other macro factors as always. But then when you get into early October, it's going to be earnings again. And I would say what's important when I'm looking at charts like HCA and AbbVie is I immediately glance up to the full quote, which is what we call this sort of panel that we have above our charts. And I always look, when did they report earnings last? So I can glance down and just see, oh yeah, that gap there was that earnings report on July 23rd. When are they going to report next? All right, late October, just before Halloween. So I know I have about 2 months, maybe 2 months plus a week or two until we have that next earnings report, which means I don't need to anticipate that big gappy move that often happens around earnings. I don't need to worry about that on these charts for a little while now. I think that's pretty valuable. The way that you add this full quote to make sure you can monitor earnings dates along with valuations and dividends and other things that I often refer to below your chart, make sure you have this selection opted here. Your charts may look like this, which are nice and clean. I totally get it. But when I'm actually analyzing individual stocks, I always have that full quote on there because it gives you the vital information to understand some of the basic fundamental earnings valuation measures that are going to help me recognize and connect the charts to the other stuff that's going to potentially drive a chart like this higher. We also have an earnings calendar. So once we get going with earnings season, you want to click on Charts and Tools in the upper left. On the right side, you will find this earnings calendar. It's beautifully done because you can pick a particular universe. It'll immediately show you things that have recently reported, and you can see where we came out versus consensus estimates. But where I refer to is the upcoming earnings, and I often will bring up the S&P 500, bring up particular sectors, whatever it is, and just make sure I know which companies that are of interest to me may be reporting when. If you're looking at a chart list, by the way, if you have a list of stocks from your portfolio or watch list, you can add a column of earnings date, the next earnings date, and you can actually sort them to make sure that you know which stocks that you follow or that you're holding and when they're going to be reporting earnings. So we've added earnings data on our platform here in the last couple of years. There are a lot of great capabilities that I think that it allows you to use to better connect the charts to the other stuff that drives the valuations of these companies over time. That's it for now. Thanks so much for joining me for this special series on Stockcharts TV this week called Top 10 Charts to Watch for August 2024. Don't miss the last one tomorrow, where we will be talking about some bearish trends and what we need to see to turn more optimistic on some of the worst performers here. For Stockcharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good one.